Rick, thanks for being here, by the way.
Oh, thank you for inviting me.
Amen. It's great to see you again. Um, Sorry, I gotta be careful because I have to let the people in, but then I can't let in AI bots and stuff. Okay. Hello, everybody. I am Sarah Grillo, and welcome to the December Transparent Advisor Movement Meetup. Woohoo! Just some administrative things real quick. So if you have hearing difficulties and you would like captioning enabled, you could just click the CC at the bottom of the screen. If anybody requires any other accommodations such as language translation, refraining from flash photography, etc., please let me know. It's always best to let me know in advance, but sometimes, these things come up. But I do want to be an accessible and inclusive environment for folks. So I welcome any accommodation requests. And I apologize in advance for any that I've perhaps neglected in my ignorance. This is a recorded meeting. There's no AI on these meetings. So I think I've done like what I can to eliminate the bots, but please don't bring the bots here. I just want to make some quick announcements about future meetings. So the next meeting, I'm going to put it, my goodness. Okay. I'm going to put the sign up in the chat. On the next meeting, we're going to be having Alan Slider of, oh my gosh, so many people are joining. This is more people than we've had in quite a while. We're going to be having Alan Slider of Fee Only Network. He's going to be coming to our January meetup, and he's going to be going over what you need to do to SEO optimize your website. If you wish to have your website personally analyzed by Alan Slider, please submit it to me. Sign up. The link is in the comments field. And then let me know that you'd like your website to be analyzed, and Alan will tell you what you're doing good and what you're doing bad with SEO. In February, not January, but in February, I'm just making this announcement well in advance. Tobias Salinger of Financial Planning Magazine is going to actually be doing a piece on the Transparent Advisor movement. So he's going to be attending the February meetup, and he's going to be taking notes, and you might actually be quoting people who are there. So if you don't want to be quoted in Financial Planning Magazine, I would advise you to come to the meetup in February, but please refrain from speaking. You can still be there and participate, but if you speak at the February meetup, in other words, what I'm saying is Tobias Salinger from Financial Planning Magazine is going to be doing a focus piece on us, and you might be quoted in Financial Planning Magazine. So I wanted to just talk with you a little bit about Immersion 2025. This is an in-person event that we are having for the Transparent Advisor movement. We're having it in Kansas City, Missouri. These are some of the folks that are going to be speaking. I put the link to Immersion 2025 in the chat. Please sign up now if you've been thinking about it. A few things I want to go over about Immersion 2025. This is, to my knowledge, the only exclusive flat fee advice only and hourly in-person event that exists in our industry. And I've done a few things differently. You're going to be assigned pods prior to the event. So the pods are actually already meeting. They meet virtually, and it has the advantage of helping you to maintain relationships, create relationships, learn about how other people, perhaps there's like an advice only pod, there's an hourly pod, there's a flat fee pod. In fact, there's a few of them because I have so many people registered so far. But I've organized it this way on purpose because I don't want this to just be something where you go, hang out, eat some chicken wings, meet some cool people, and then go home. I wanted there to be continuity. So there's actually continuity from last year's immersion people that are returning. Several of them are returning. In addition, there's continuity in the sense that you are paired up and will be virtually communicating and working together, sharing ideas and immersing with your pod prior to the event. Okay. And I even keep them up after the event so that if you want to stay in touch through pod after virtual pod after the event, then that's okay too. These are the reasons that a lot of people have decided to go to immersion. You might meet your future successor. It is an epidemic issue in our industry to find succession planning, to find a successor. It's especially hard to sell a flat fee firm. Advice only firm, hourly firm. These are the folks that are practitioners that are doing it. If you're thinking of selling your firm, looking for a business partner, looking for somebody to even join your firm as an employee or to partner with somebody, merge, whatever, I would think you would want to meet the person face to face. And this is an opportunity to do it. I picked Kansas City, Missouri. I don't know if that's smack dab in the middle of the country, but I tried to be as fair as I could. The other thing is there's no esoteric thought leaders. I'm not going to have somebody come and give some rah-rah speech. I give a small speech in the beginning, maybe about just 10 minutes. And that's just because I have to go over the guidelines, no sexual harassment, no discrimination, etc. Right? But then I shut up and I let the practitioners take the stage. This is a how to do it practical, nitty-gritty look inside the businesses. And I did it this way on purpose because I wanted it to be practical. Okay. So by that same vein, there's no exhibit halls, no sponsors, and no selling. This is going to be about pure interaction with each other. Okay. I kept it very pure. I've had numerous opportunities. I've turned away a lot of money for the purpose of keeping it pure. Okay. So there will be nobody selling you anything. It's just going to be about what really matters and what's meaningful. You won't have to answer this question. Hey, no ARM commissions. How do you make money? Are you sure you can scale a business like that? Blah, 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 right? If you're considering transitioning into this business model, maybe you're a hybrid, you're doing AUM and maybe some hourly, whatever you're doing, maybe you're an insurance agent. I don't care, and neither does anybody else. This is about championing the spirit of transparency, learning and teaching each other. We have as much to contribute as we have to learn about how to treat clients with more fairness, logic, clarity, and how to be better advocates, both for our employees, our clients, and for the profession as a whole. So Immersion 2025, the link is in the chat. Please ask me any questions. If you want to meet with me and talk about it, I'm happy to do that too. And now, having said that, I'm going to turn it over to Rick Ferri. Woohoo, Rick, thanks for being here.
Well, thank you for having me here today. It's a little choppy, so I don't know if everybody else is having the same problem that I am, but I'm getting a little choppy video. Is everybody seeing the same thing?
I'm seeing you just fine, Rick.
Okay, so I'm ready to go. So I don't know how you would like to handle this, so up to you.
Okay, just give a 2-minute on your practice.
My practice now or my history? How would you like me to start?
More than a 2-minute history, Rick, but
okay, my practice now is simply hourly. I have a fixed fee of $9.95 for what I call a portfolio second opinion. And I like to say that I'm not a financial planner. I'm a investment advisor, but that doesn't mean I don't need to know everything about the client, where they are with their financial planning, and to be able to help them create and manage their own investment portfolio. So I charge $9.95 for a portfolio second opinion, and that's it. Then I write up a little 3-4 page letter to them talking about where they are, what they need to do, and I get paid $9.95. After that, if they come back 6 months, a year, 2 years, 5 years later, I charge $4.50 an hour, and that's it. That's my whole business model. Are you talking? Because I don't hear anything.
I'm not talking. How do you get your clients, Rick?
Oh, wow. I mean, I have a website, and people go to the website and fill out the contact form. I probably get 30 to 40 leads a month from that, and then referrals as well. But I mean, right now, because I have so much content out there on the internet, it's mostly content marketing. You know, I've written many books. I've written many articles. I have a podcast, the Bogleheads on Investing podcast. I'm very involved in the Bogleheads. I was the president of the John C. Bogle Center for Financial Literacy for a few years. And people find out about me through one way or another. They go to my website and they just send in a contact request, and I put them on my waiting list to do a 15-minute, really it's 20, 25-minute free complimentary call. And there's about 500 people on that waiting list right now, unfortunately. I say unfortunately because it's just, I never get to everybody. I can't. So way more leads than I could possibly talk with. And, once I do that short 15-minute call with them, they get on another list to potentially do this portfolio second opinion, but they have to wait for that too. So the whole wait time is at least a year right now. I think it might be a year and 3 or 4 months at the moment. So it's just the way it is.
Okay, so having said that, does anyone have any questions for Rick?
I do.
Okay. Hey,
Skip, do you want to go first?
No, go ahead.
So I am actually, so I'm Chuck Brown. I'm the principal of a firm in Boston called Longview Investment Advisors. And I actually have been, I've been a big fan of yours. And I go back, gosh, 10 years following Portfolio Solutions.
right.
The firm that you founded that firm, correct?
That's correct. In 1999, I founded that firm, correct.
Yeah, to the point where I was printing out the ADV and so forth because I liked the model, and you guys used to have these modules on your site, and I literally printed out or downloaded every single one just in terms of education and reasoning, and it's just what a great firm that you founded and developed, and philosophically, just it was a model that I really wanted to pursue going back a decade, and which I have actually done that. And I'm just curious, is you mentioned your history, and I'm assuming that you built up the firm and to a certain point, and then sold it and had a liquidity event. And I'm curious to know your evolution in terms of that success story as an AUM percentage AUM model with lower fees, index overactive. I mean, I even listened to probably the whole thing with the Robin Powell, Rick Ferri, Charlie Ellis
Yeah.
On YouTube. Evidence-based investor, you know what I'm talking about.
Sure.
So,
yeah.
Anyway, I'm just curious as your transition and how you view that from, low fees, because maybe the industry is just high fees, and to hold Sarah's whole mantra of complete lack of or selective transparency, just low levels of transparency, and how you look at that transition for you as a percentage, low percentage model versus a flat fee model, and
Sure.
also sort of like creating a liquidity event in the sale of a firm, as you evolve your career. But obviously it's nice to have a liquidity event at some point after you've done great work and create a retirement event for yourself, or anybody looks at it for themselves.
Well, thank you. Portfolio Solutions was an idea that I had back in the 1990s when I converted or discovered or had my epiphany about index funds. How I was working at a brokerage firm for 10 years, and they said, this is not the way to go. I need to do indexing. I was working at Smith Barney at the time, and couldn't do it there, so had to leave and started my own company. So the fee that I decided to charge clients was 25 basis points. Remember, I was an asset manager, not a financial planner, asset manager. So people who wanted to have their portfolios managed only in this new way of indexing, passive, but was willing to pay a service fee to somebody to do it, and that's really what I called it. I wasn't trying to outperform anything. It was just a service fee that I was charging of 25 basis points. We could open the account up at Charles Schwab. It's just my wife and I working out of our living room to begin with. Used Schwab as a custodian, eventually branched out to a few other custodians, but 25 basis points. So where did I get that 25 basis points from? Well, believe it or not, it came from American funds. Because when I was in the brokerage industry, American funds would come around and I'd had a good rapport with American Fund rep. And I asked him one day, if I put $1 million in various American funds, bond fund, international fund, Euro Pacific Fund, Growth Fund of America, and so forth, what do I get, as the advisor? And there was a small, the client got in at NAV. So they got in because it was $1 million. They got into American funds at NAV, but I still got a 12B1 fee of 25 basis points. So I asked the rep, what do you think that 25 basis points is for? And he said, well, it's for you to service the client and help with the asset allocation. And if we think something's going on that the client needs to know about, you relay this to the client. And so you're just servicing the account and trying to be an advisor to the client. And we think that's worth 25 basis points. And I said, yeah, I think so too. Only I didn't say this to him, but I said, I'm not going to do it with American funds. I'm going to do it with index funds. And so I opened up the account at Schwab, and I used index funds. I used some DFA funds, but a lot of Vanguard funds. And then as ETFs started to come on board, we used more and more ETFs. And that got to be very popular very quickly because it was so much lower in cost, not only because of our 25 basis point management fee, but because of we were using index funds rather than active management, where it started to grow and it started to get attention. And I ended up getting Jonathan Clements, who was working at the Wall Street Journal at the time, contacted me, and I think it was 2001, and he had a conversation with me about what I was trying to do, become the vanguard, if you will, of the advisor marketplace. And he wrote an article about that in the Wall Street Journal. And next thing you know, the phone is ringing off the hook literally for the next 2 years. So we scaled up and got some real estate. I brought on a business partner, and we grew the assets over the next, say, 15 years. Started with about 60 million under management up to about 1.5 billion before I sold, and it was not. I wish I could give you good advice on how to sell a company, but I had the worst experience you could possibly imagine selling my company, and it was like 2 arbitrations with business partners. It was the ugliest thing you'd ever seen. So ended up coming out okay, but I mean, it didn't. Don't ask for my advice when it comes to selling an asset management company.
Yeah. Wow. And so the difference. So you were doing just asset management, and to the extent did you, and now you're basically, you're an investment advisor. What is really the breakout for you in terms of advising and investing for the portfolios? And I'm assuming as an hourly advisor or a flat fee, that you're not actually managing or trading on the assets. You are just literally giving people advice. I don't know if you're drafting memos for them or anything, or it's literally just time spent going through stuff on the phone or Zoom or in person. Am I describing it?
Yeah, but basically it's time spent going, on the phone with them for 2 hours, going over everything.
Right.
Again, a lot of times we don't even get to the investment portion. It's a 2-hour call. We'll spend the first hour and a half learning about everything else, talking about everything else, taxes, retirement, distributions, IRMA, I mean, you name it. And kids, you name it. It would be about an hour and a half of just all of that, and estate planning, insurance. And then in the last 30 minutes is investing, because quite frankly, I've got it down to the science, if you will, where it doesn't take long to talk about the investing side of things, because you're going to use very simple portfolios, a few good funds, a few good index funds. I mean, taxes are a problem with taxable accounts, but other than that, we can get through the investing stuff in 30 minutes. And then I hand them I write up a letter that has all this in it, everything we talked about, including my recommendation for their portfolios, and I send it to them, and then they pay me. But back to, the portfolio solutions, I didn't want the company to do financial planning. I mean, Skip would know. I used to go to the Garrett planning meetings. In our view, I mean, financial planners did financial planning. We managed investment portfolios for people who didn't want to do it themselves. And in some cases, the financial planners who had an ongoing relationship with the client who didn't do investment management either, they would refer clients to us. So I had a real close relationship with Cheryl Garrett, the Garrett Planning Network, and that was one aspect of where our clients came from. So again, we were investment advisors, asset managers. We weren't financial planners, and we really didn't want to be. And even today, I'm not, again, I would say I'm not a financial planner. I'm an investment advisor, but I do have to go over a lot of financial planning stuff in order to be able to help the client with their investment decisions.
So was that a handoff to financial advice? I mean, financial planning advice back at PS? You would hand it off to another firm, or they would ask you for a recommendation, or did you just organically get into it in the conversation? And as a part of the conversation, you knew things. You obviously built your knowledge base to where you could give them soft advice. They could go to an attorney or a CPA.
Right.
In terms of that, is that
or a financial planner,
or a financial?
Right, exactly. Yeah, we would send people to, if they needed, like retirement distribution or, a lot of insurance or estate plan. I mean, if they needed a financial plan beyond the portfolio management portion of it, we could get into asset allocation, risk, how much risk should you be taking, how much money you're going to need later on down the road. So the kind of the retirement planning portion of it when it comes to investing, we would get into that with the clients, but we wouldn't get beyond that. If the clients needed more than that, we would recommend they go to a financial planner. And generally, what we used to do is just send them to the Garrett Planning website, and they would go there, and if they would find a planner in their neighborhood, and that's what we generally did with those people. Now, a lot of people already had planners, and so they didn't need that, or they just wanted asset management. So, we just worked with them at that. But again, Portfolio Solutions, hence the name Portfolio Solutions, was a asset management company.
Hey, Rick, you got a question from Cody Garrett. Cody, fire away.
Hello, Rick. Good to see you.
Hey, Cody.
Just a quick question. Yeah, absolutely. So I'm kind of the opposite of you. I do call myself a financial planner. And I wonder though, you talk about, the phrase I use is, so funny. Oh, it says to rate, lower my hand. That's funny. So I always said, to give advice in someone's best interest, you have to understand their interests, right?
Sure.
You have to learn about them. And you say that you still do some sort of like data gathering, like getting to know them.
Yeah, sure.
So could you share like quantitatively, like what's your process for gathering information, and what information do you ask about if you aren't doing planning?
So I have a client profile I have them fill out. I want to know their names, their ages, their children's names. I want to know whether they have trust, wills. I want to know what kind of insurance they have, if they have life insurance, disability insurance. And then I want them to list out for me, what their goals are, goals for their children, goals for inheritance, if they're going to be getting an inheritance. So I ask a lot of questions on this client profile. And then when we get into the 2-hour call, I go over all of that. And I like Cody. So Cody, tell me a little bit about your family. You've got 2 children. How are they doing in school? It's just a conversation. Mm-hmm. So I want them to feel very comfortable telling me everything that's important to the conversation. I need to know about their parents. I need to know about if they have any siblings that need their help. I need to know if they have special needs children and what the extent of that is and what the estate plan is for them, because this is all part of the investment portfolio. I may not sound like that, but I really do need to get a really, really good understanding of where they are, what their situation is, and what their goals are, so that I can eventually, in the end of this conversation, we can have a conversation about the investment portfolio. So that's why I say probably spend an hour and a half on the front end before we even talk about index funds or target retirement funds or anything like that. And
lastly on that, do you look at their statements, or do they just tell you what they have invested within each account?
I prefer they upload their statement, although you get a lot of different things from a lot of different people.
And
so
which software do you use to upload? I'm just wondering,
I use Dropbox. So I open up a Dropbox folder. If a client's going to do a meeting with me, if they schedule a meeting with me, I use Calendarly for scheduling. Mm-hmm. So I will open up, send emails out to all these people on the waiting list to schedule either the 15-minute introductory call and these are the slots I have available. And then there's the portfolio second opinion. Here are the slots I have available. And then there's the client calls, which are 1 hour time slots. Here are the slots I have available. So I send out all these emails every other month for 2 months in advance. So I kind of work 2 months in advance. So I just sent them all out for January and February. And then people just fill it in what they, the times that they want to do it. But I set the time. In other words, I don't want to get into the business of them saying, "Oh, let's coordinate some time." I set the time. I work 4 days a week talking to clients, and that's Monday, Tuesday, Wednesday, Thursday. Wednesdays are my 15-minute days, so that's when I do all of the introductory calls, kind of the pro bono day, because about half of those calls are just simply pro bono. They don't really need a full-blown 2-hour consultation. They just need a little bit of advice. So I give it to them over this 20, 25-minute period of time. The slots are every 30 minutes, even though I say 15. Okay. And then the other days, Monday, Tuesday, and Thursday are for, I have a meeting with a new client and I have a meeting with an existing client. And that's my schedule. So now I could work more, but I'll be 67 and I just don't want to. So 4 days a week is plenty for me. And usually I'll take a week off during the month, and usually I'll take 2 months off in the summer. Despite all of that, my revenues are still $200,000 a year. So, you can make a good living working part-time at this if you do it right, in my view. So I think that if I actually did it full-time, like when I was in my 40s, I probably, worked that hard. I probably could make $350,000 to $400,000 a year pretty easily, I think, doing this hourly method. I don't know if I went too much into that, Cody, or not.
No, that was great. Other questions up, so I'll end here. But appreciate you, Rick. You're awesome, and I
Thank you,
follow
Cody.
you everywhere else. Yep.
Great.
Mike Stamen has a question. Go ahead, Mike.
Thanks, Sarah. Thanks for being here, Rick. I love the model. What you're doing. I think there's, I can certainly see a huge need for it. Obviously, there is, based on your waiting list. So I don't think it's a path that I would want to go down that model. Just how I operate, but I see a big need. So my question is I'm guessing there's probably many others on this call that would do great work. And might be interested in doing that kind of work. So do you have you've got this long waiting list. Do you have a referral list? Do you refer people out?
Sure. And basically right off the bat, when they send me a contact, I send them an email back and saying, my wait list is very long. So there are 2 places I send people to. I send them to Cody's website. And then there's another website. I can tell you what it is.
Which, by the way, I send them somewhere else. So we'll just.
Oh, you do?
Yeah. I guess you send them to my PDF that I made like a few years ago. Is that what you send them?
Well, I'm not sure where I send them, Cody. Let me take a quick
We're just
look.
sending each other clients without accepting any. That's great.
Give me a second, so I'll tell you
Just
where I'm
making sure,
sending
just
them.
making sure.
Advice Only Network.
Okay, yeah, that's not my website, but yeah, that's great. That's a good option. Yeah.
Advice Only Financial.
Cool.
That is your website, right? Advice Only Financial?
No, mine's measured twice. So yeah, adviceonlynetwork.com is probably the best place to. That and hellonectarine.com is another hourly.
Well, why don't you send me an email? I'll update this.
I'll send you the ones that are probably good choices.
That'll be great.
Cool.
I appreciate
All
that
right, cool.
because I mean, I say other advisors had more availability. Here's an extensive list, Advice Only Network, and then I have this other one, Advice Only Financial. But I know that Rob Berger has a list. I know there are certain lists out there. But Cody, you send me your list, so the people that that what I should be using, because I really don't know. Okay. And
Nectarine, Jeremy's here, so.
Okay, great, perfect.
Yeah.
Okay.
I have a list as well. I have a list of hourly advisors.
Okay, well, I just need to know, what these lists are, the most comprehensive ones that are doing just advice only. And I know that's what Cody's site was. So I mean, I send this out. I don't know how many people actually follow the link because,
Okay.
I don't have time.
Okay, everybody on the webinar, who else has questions for Rick? Let's hear them. What software do you use for CRM and portfolio reviews?
CRM. I use Excel, believe it or not. Remember, I'd say 2/3 of my clients are one-time meetings. And I do a review. A lot of it's validation. There's no reason to do an update. If they want to come back, they'll come back. But so far, I've been doing this now for a little over 5 years, and 30% of the people have come back. So I don't have a CRM. I actually keep everything in Excel. I know it may not be the most efficient way of doing it, but it works for me. And of course, everybody that I do a portfolio second opinion for is going to have a Dropbox folder. So all of their information is in Dropbox. Portfolio review. And I wish I could give you a sophisticated answer in that, but I've been doing this for almost 40 years, and the portfolio review is up here. Okay, it does not take me long to break down a portfolio. I can do it much faster than any software that I've ever found. And what I need to get out of that portfolio when I'm looking at it, I know what I'm looking at when I'm looking at a portfolio. I know if the client put this together. I know if an advisor put this together. I could tell you if Fidelity put it together. I could tell you Schwab put it together. I mean, I know who put it together. I know what's in it. I know how they construct portfolios. I can see it. I can say, okay, I know what this is, and I know what we need to do about it. So there isn't any software to review the portfolio.
Okay. Yeah, so the more questions coming in on the chat here, Rick. What are you able to include in a portfolio review in 2 hours?
What am I able to include? I get all of their account statements, and we go over every single account. Well, but realize the whole purpose, the reason they hired me is to simplify their portfolio. They want to make it simple. Most of these people are not using asset managers, or they were using asset managers and they fired them, and they just want to manage it themselves in a few good funds. So my role in this is to boil this portfolio down, simplify their pre-tax retirement accounts, simplify their Roth accounts, simplify if they have HSA, go to their taxable accounts, figure out how to unwind a lot of things in there that has a low cost basis through tax loss harvesting and a lot of different things, and come up with what a reasonable portfolio would be across all of these different accounts. Honestly, it takes me no more than 30 minutes to do that. It doesn't take long.
How much information do you have to gather from clients for these single meeting reviews? How long do you need to retain it? Curious about the compliance aspects and admin work required for such short engagements. Thank you, Bob.
Yeah. So I mean, I collect my agreement with them that they're going to pay me the $9.95, and if they use me again, they're going to pay me an hourly fee, whatever it happens to be when they contact me again. So that's just an agreement. It's a 3-page agreement, pretty standard. In Texas, there's a couple of other weird things because I'm a Texas advisor that I have to put in there, so I do. Then there's the client confidentiality, the client profile that I asked them to fill out, and that's like 4 pages long. And then I get the statements from them, or a spreadsheet that has all the statements in it. And if they have, a lot of people have put together asset allocation spreadsheets and everything, I say to them, well, whatever else you think is important, send it to me. Maybe your Social Security statements, things like this, send it to me. So they'll put all that stuff in Dropbox. So generally when I open up a Dropbox folder while I'm getting ready for a client meeting, there'll be anywhere between 10 to 30 documents in there that the clients put in. And I'll go through all of that. I'll take all my notes. I'll prepare what the client has in each of these buckets, the pre-tax bucket, tax-free bucket, taxable bucket, and any insurance that they have, any real estate that they have gets into another bucket. And so I've got a kind of a system that I set up for making it simple for me to understand everything they've got and where it all is. And that's how I do it. Again, I probably cover an awful lot of ground. If one of you were to listen in on one of these calls for 2 hours, you'll say covers an awful lot of ground in 2 hours. Yeah.
Okay, next question. Are you providing any follow-up list of tasks for the client to do, or is it up to the client to take notes during the meeting?
No, I send them a letter outlining everything that we talked about. So again, it's in bullet point, but it has an estate planning section, there's an insurance section, there's a gifting section, there's a section on, obviously their portfolios, and there might be a couple of other sections that I can't remember off the top of my head. Again, we're hitting these things sometimes pretty quickly, but I write it all up in the letter, and that goes out to them. The letter takes me a couple of hours to write. These are not the most profitable things. If I spend 35 minutes 30 minutes before the call, 2 hours on the call, and then the letter can take up to 2 hours. So I'm spending like 4.5 hours on one of these portfolio second opinions, and so it's not extremely profitable. I'm probably making $2.25 an hour, really on these calls. The other calls, the hourly calls, are more profitable for me.
Daria, your question, please.
Oh, hello. Thank you. And hello, Richard. My name is Daria. I represent Association of Financial Planners from Russia. And
wow. My wife's name is Daria, by the way.
Your name is well known in Russia.
Really?
And I think in other countries too. And I have two questions, I think, about marketing. And firstly, you have a very strong marketing activity and public relations activity, and so it was your strategy, or it was just an accident. It's just happened. And second question, was it difficult for you to have so big to stay so famous, and what are you doing now for maintaining your fame, for staying very famous, and because you don't say nothing about it when you talk about your work schedule. Do you make some comments in maybe newspapers, on TV, and so on?
Yeah, so content marketing, that is what I have always done. Before I even left the brokerage industry back in 1999, I had written a book. I couldn't publish the book until I left the brokerage industry because there was a lot of things in the book that would have gotten me fired if I published the book or tried to publish the book, and compliance would not obviously let me publish that book. But as soon as I left the brokerage industry, I published a book called Serious Money, Straight Talk About Investing for Retirement. And it was all about index investing. Now, back then, 1999, indexing wasn't a big thing. Index funds were not a big thing. And I wrote a book about it. There was only 2 books about index funds out there at the time. John Bogle had written a book called Bogle on Mutual Funds that he published in 1994. And a fellow by the name of Simon wrote a book called The Index Fund Revolution that he published in 1998. Other than that, there were no books on index fund investing. So I had published my book, and that did okay, but I self-published it. I ended up getting a call from McGraw-Hill. They wanted a book specifically titled All About Index Funds, and they contacted me and they asked me to write it. Glad to do that. So I wrote a book called All About Index Funds. That led to another book called All About Asset Allocation. And then I ended up writing a book called The ETF Book and The Power of Passive Investing. So I was writing books, and I was also writing blogs. I started a website that's rickferri.com, and I started writing a blog. It was actually on my old website, Portfolio Solutions, but I moved it over to my own website for compliance purposes, so it wouldn't be part of Portfolio Solutions, but I started writing a blog. I would write 2 blogs a week, and they got to be very popular. And so between the blogs and the books, and then I started getting calls from a lot of journalists because I was out there. commenting on index funds and the growth of index funds, and particularly exchange traded funds, because they were very new and nobody was writing about them and nobody really even knew how they worked. I was talking about them and educating people, and doing what I was trying to do to tell the world about these great products and different way of managing money besides active management. So that, I caught the wave right at the beginning of the wave, and I was very fortunate to be at the forefront of all of that. And because of that, I became this kind of a noted person for the media to go to, which was very helpful, obviously. So it was a plan from the beginning to do content marketing as a way to market myself, where I wouldn't have to pay for marketing. I wouldn't have to pay for it. I was actually paid, for writing books. I was paid to write some articles I got on as a contributor to Forbes magazine, and then I was writing for ETF.com, and I was paid for that. So you think about it, if you're being paid to write and it's bringing you business, it's the best of both worlds. So ended up with my business, I ended up bringing on a partner so that he could run the day-to-day operations of the business, and I could concentrate on content and consulting, but mostly I was concentrating on content, and that's how we grew the company. So it definitely works. That was the first part of your question. And as far as staying famous, I'm doing a podcast now, Bogleheads on Investing. Say again?
Do you have a bodyguard?
Thank you so much.
I have a dog. Anyway, as far as staying famous, you have to continue to do something. And so, again, I got very involved in the Bogleheads, and I said, the Bogleheads needs a podcast. We should have a podcast. And so I started Bogleheads on Investing podcast. It's nonprofit. There's no commercialism. There's no commercials. It's paid for by, very little. Really, I do the whole entire thing. I pick the guests. I do all the editing. I publish the podcast, everything from top to bottom, everything. I do the whole thing. It takes me a long, long time, probably easily 2 or 3 days a month to publish this podcast. But that drives business to me, even though I'm not marketing. I'm not saying that I'm a financial advisor and contact me at this website. People can find me. And, if you get your name out there, people can find you. So that drives a lot of people to me and keeps me famous, I guess. And when I finally stop taking new clients, which will be in 2 years, so I have 2 more years to go, I'll be taking new clients, and then I'm not taking any new clients. I'm going to get back to writing and get back to publishing. I have another book in the works called A Few Good Funds, A Few Good Funds. The Majesty of Simple Investing. And also I'm going to update some of my other books. So I'll continue to be out there. I'll continue to draw many, many, many people who want people like you to help them. But it won't be me, because in a couple of years, I'm not going to be doing any more new clients. So I'll be generating a lot of interest from a lot of people who want this type of consulting. I just have to, figure out how to disseminate it, how to get it out there to you all.
What kind of succession plan are you considering, Rick?
Oh, John Luskin is my succession plan. He is, John and I have been working together for many years. I've known him for many years. He got started with Luskin Financial. You know who John Luskin is, by any chance? Anyway, John, I got him started doing these. He does what's called a one-day financial plan. He is a financial planner. And in my ADV, because we have to have somebody, John is my succession. So if something happens to me, John takes over.
But if you have a wait list of like a year and a half long or however long, it's still.
John is booked up too. I try to push business to him. He pushes it back to me. It's just, I'd love to give business to Cody too. But Cody can't take it either. So, it's just, the problem is not it's not getting clients. That's not the problem at all. The problem is the dissemination of these people who need help. And, and hopefully, Sarah, you're doing a lot to help there in some way. But it has to be in other words, if people are looking for a one-day financial plan or, a portfolio review, they may not be looking for a full-blown financial plan that has, multi-stages to it, that goes on for, it's a continuous involvement with the planner. They may not want that. So, I mean, it's, we got to find the right people to send these leads to. And I haven't really worked on it that hard, quite frankly.
I think, just as a side note, we need to figure out a system for this because there's people on this call. There's Cody, there's Jeremy Snyder of Nectarines here. I'm here. I have a list. Stephen Fox of Advice Only is here.
Oh,
okay.
yeah, great. I've listened to Stephen
Rick,
talk. It's great.
A business meeting needs to happen. Okay.
Okay, fine.
Okay.
Fine.
I'll email you after this.
Okay.
Amen. Okay. Yeah, more people, just everybody's saying, someone has a question. Whoever had that question about indexes, if you want to ask the question about indexes, please ask it.
Sure, so that was me. Hi, Rick. It's
Hi.
really great to see you here. I'm a Boglehead and recent
thank you.
career. So I had a technical question, more for your CFA brain, and I hope that's okay.
Oh, fine.
So
I'm actually
I was
better at that.
Okay, well, fantastic. We'll jump right in then. So I was wondering how would you modify, if anything, your core 4 fund indexing portfolios for an employee of a FANG company who has significant holdings in their employer's stock? And I want to know your thoughts on direct indexing as a potential alternative.
Lot there. Okay, so the core 4 is just simply something I put together almost 15 years ago, which is if you want to have a simple portfolio of just a few index funds, and let's call it 4. Why did I come up with 4? Because it was already a 3-fund portfolio. So I said, okay, let's use 4. And I called it the core 4. And at the original core 4 was a total US stock market index fund, a total international fund, a total bond fund, and a TIPS fund. So there were two stock funds and 2 bond funds. And then that got modified a little bit to 3 stock funds, which was a total stock, a total international, and a REIT index fund, and just the total bond market. So I ended up saying, well, various people want different types of core 4. So I developed a website called Core-4, and I think I came up with like 6 different core 4s. There's an income producer, there's an ESG, and so forth. But it was just an idea to say, if you want a simple portfolio of just 4 funds, here's some examples. That's all it was. That was it. But they work. I mean, it is simple. Now, as far as your question about you work for a company, you have a big part of your net worth is in that company, and you may have a lot of restricted stock in that company that you can't sell or it hasn't vested yet. And what do you do about that when it comes to managing your own portfolio? And you mentioned direct indexing. I'm not a big fan of direct indexing. I'm just not. You end up with hundreds of individual stocks that up until last week, you couldn't do anything with. And I'll get into what happened last week. But so that's way too complicated. I tell people, you just buy a total market index fund, a total international index fund, and yes, you have this big position in one company, maybe Google, maybe Microsoft. But if you're okay with that, if you wish to have some diversification against that, then you could buy maybe a large cap value index fund. At least it's in industry groups that are not overlapping with your tech. So in other words, I don't get into it. I'm trying to keep it simple. Simplicity for me is what I'm aiming for. So where I understand the issues that I have clients that have a lot of money. I have one client who was 28 years old. He's got $8 million of NVIDIA stock, and that's all he has. And I'm like, well, we need to diversify this. But direct indexing, I'm just not a fan of. I mean, direct indexing has been around for 40 years. Parametrics first started it years and years ago, so it's nothing new. It's been called, got changed to direct indexing. Used to be something else. I just don't like, if you could use direct indexing if you have one big position and one big stock, and you could leave it out of the direct indexing portfolio, but it's an awful expensive proposition to be paying higher fees on the direct indexing portfolio just to not have the stock in it. I'd rather just have a total stock market index fund and bite the bullet myself. Anyway, I don't want to belabor it, but why don't you go ahead and if you have other questions, I'd be happy to answer them.
Oh, no
Yeah.
other questions for me. Thank you.
This was from Skip. I use the Core 4 portfolio recommendations extensively. Do you have any plans to update the portfolios, specifically the underlying ETFs? Semper Fi.
Yeah, Semper Fi. Yes, that is in my post-retirement plans, Skip. So 2 years from now, I'm going to update that website. But the portfolios, I mean, they're really everlasting. Again, I'm not in a hurry to update any of the core, not the basic ones, not the two U.S. International total bond tips. I'm not going to change that. And then U.S. stock, international stock, real estate, if you want, and total bond. I'm not changing that. I may go in and look at some of the other ones like the ESG and a few others that have had maybe some better, cheaper funds come out. But the basic core 4, I'm not going to be changing at all.
Thanks. And just a follow-up question, like you, I'm hourly only, but more on the financial planning side. And most people who come to us are, 1 foot in the door to retirement, and the one and done approach is what we use. Between myself and my business partner, who's 25 years younger, retired Army colonel, we're booked out. He's got a waiting list, 18, 19 people long. I'm booked out in the spring. So just a plug for hourly planning. It's sought out and people want it. And they feel like they can just come and get what they need and leave, pick an apple off the tree and go. And I encourage other people to take a look at it. Well,
in addition to that, they'll come back too. Like I said, I've done almost 1,000 of these portfolio second opinions now. So I have 1,000 clients. Well, I've been doing this now for 5 years. 300 have come back already, and I expect over time more will come back. But they only need to come back when something's changed. They don't need constant. No, some people do. Some people want an update every 6 months. Okay, so they pay for an hour every 6 months. Some people do it once a year. Some people every 2 or 3 years. I don't know when they're going to come back, but they do come back, and that's fine. And when they come back, I've got all their information on file. Oh, one of the questions was, I keep everything in the Dropbox folder. I have to keep it there for 7 years. That's the compliance rule. So everything stays in that Dropbox folder for 7 years. And so I have data on clients for 7 years. And I'm not going to delete it after 7 years. I mean, the client can delete it, but I'm not going to delete it. And if I died, the succession plan, John Luskin has access to all these folders. And if I should die as part of my succession plan, he already has the main Dropbox link that has all of the client information for all of the clients that I've met with in there as part of our succession plan. So he has all that information if need be.
Rick, what percentage of the time do you feel like people act on the recommendations that you give them?
Good question. This is the difficulty, and Skip, you could chime in. We don't know. I don't know whether they actually act on it or not, unless they come back for an hour consultation and they send me all their updated information. Then I know whether or not they did it, whether they did it fully or only partially, or didn't do it at all. And I get all three, by the way. So maybe they feel embarrassed about coming back if they haven't done anything. So they don't come back until they do something. But it's a range. I mean, there are people who do everything exactly, almost 99%. There's always one small thing that they don't do, or they didn't do it for a particular reason. But and then there's people who get it half done. And then there's people who get nothing done. And so, I don't have any way of tracking that. And I'm not going to track it because that's not my business model. If you think about what I do, the portfolio second opinion is my opinion. If I were you, knowing what I know, if I were you, this is what I would do. This is how I would do it. With this idea of making it simple, being tax efficient, integrating distributions in your retirement with portfolios and IRMA and maybe Affordable Care Act and all of this. So I'm looking at the big picture saying, where are you going to get your health insurance from if you retire at age 60? Are you going to use the Affordable Care Act? Okay, that's a certain distribution model. So it's also a certain, maybe some changes to your portfolio now to get you ready for that. And just, if I were you, this is how I would do it. And in your retirement accounts, this is the fund that I would use. It might be a target date fund. I'm very big on target date index funds, Vanguard, Fidelity, Freedom. I mean, they're very low cost, they're very good. I think they're great, simple. And so that's how I approach it, and that's what I tell them. It's my opinion, how I would do it. Whether they do that or not, I don't know.
Okay, Rick, I have 5 minutes. I'm sending out the 5-minute warning bell, everybody, okay? I have to end this in 5 minutes. Okay, I see Mike has a question, and then I have a question after that. Okay, go ahead, Mike.
Just a quick follow-up. You mentioned a few minutes ago an update or news about direct indexing.
Yeah.
Can you
Okay. So Wes Gray, Alpha Architect, has just launched. I mean, like I just got Wes Gray is a good friend of mine. He's a Marine, doing some great work with taxes, right? So this just came out. I mean, they just got the SEC approval on this, where if you have a portfolio that has some concentrated positions in it, are you still there? Because it seems like I'm losing. Okay. If you have a portfolio that has concentrated positions in it, or it's a direct indexing portfolio that has a lot of securities in it, you could turn in that entire portfolio to Alpha Architect and you get one ETF back. That's a total stock market ETF. So when you really start to learn about ETFs, you see the create and redeem function allows them to take the stock that you have very low cost basis. So let's say you have a portfolio, 25% of the portfolio is in Google stock at a very low cost basis, or Apple that was bought at $5 a share. And you can go up to 25% of your portfolio in each of these stocks. 5 stocks can make up 50% of the portfolio, but then after that, it has to be diversified. It could be in ETFs, so forth. You take this entire portfolio. For individual going directly to Alpha Architect, it's $1 million minimum, but for advisors, it's a $250,000 minimum. You take this portfolio, you turn it into Alpha Architect, and what the client gets overnight is one ETF, like a Vanguard Total Stock Market ETF. It's not called that, but it's 15 basis points, and you get basically the U.S. total stock market. Or if it's an international fund, you can get an international ETF. So now you have a way of taking direct indexing that is useless now, because you've used up all those tax loss harvesting, and all you've got now is 500 stocks that are appreciated, and you can't do anything with it, but you don't want to continue to pay the manager evergreen management fees for managing this. You take this entire portfolio, turn it over to Alpha Architect, get a portfolio of one ETF that trades just like a regular ETF. I mean, it is an ETF, and it's a total stock market ETF. Okay, they just got approval to do this. So it's using the ETF structure. Yeah, I mean, it's great. They've been working on this for a long time. I talked to them about it 3 years ago, and now they finally got approval. So I think you'll be hearing about that. And advisors with us, individual, if I went to somebody, if I went to them, it's $1 million, but from advisors, it's $250,000. So it's even a better deal.
Rick, 2 minutes left here. What advice would you give to somebody who is just starting out, maybe doesn't have the most clients?
Yep.
What would you say?
You mean they're just trying to
advisor on the hourly model?
Oh, okay. The idea that you can't do very well for yourself as an hourly advisor is a myth. And you could have a very nice career, have very good income, have very good clientele, very good loyal clientele. And you talk about transparency, you owe nobody nothing. I mean, you can be as not just transparent, but as super honest as you can imagine yourself being, because you have no conflict of interest at all. I don't, people say, well, the conflict of interest may be you want to charge more hours. Well, okay, that may be a conflict of interest. But the point is that you can have a very good living here. And if you want to know somebody probably has been doing this, who has had a very good living, is Alan Roth. Alan Roth's been doing hourly planning for I don't know how long. I don't even know how much he charges anymore. And he's got a huge wait list. I mean, it's not hard to make $300,000 a year doing this. It's just, you got to get your name out. And like I said, John Luscombe's been doing this for 3 years and he's already booked solid. Cody's booked solid. Mike Piper he's doing tax planning, but he's booked solid. Doesn't take long. Really doesn't take long once you get your name out there and get a reputation. You're going to have a really strong business. Can you sell it to somebody? But that I don't know. And I know that you were talking about that earlier.
We're going to talk about that at the immersion. And there are solutions that people are putting in place in the industry that are hopefully going to offer some answers to that. By the way, if anybody needs marketing help, I have a daily marketing newsletter. It's free. I give a daily marketing tip a day. Just go to my website and sign up for my newsletter. This is completely free. And it's just resources, because a big part of what Rick's success has been his ability to get out there and get massive attention for his ideas. Okay.
Yeah. Be a media pig. Yeah.
Yeah. All right, everybody. Thank you so much for being here. Rick, thank you. And to all of you that are considering the immersion, please sign up.
Thank you very much for having me. Appreciate it so much.
Amen. So listen, if you're considering immersion, please set up a time to meet with me and discuss it. I will be objective and try to figure out if it actually works for you. If you are not considering immersion, you don't want to go, you can't go, whatever, please send it to 5 people that you know. I am keeping this to 50 people on purpose. But having said that, I want it to count. And I want it to be meaningful. And I want everybody who needs to be involved to get the message and to be there so that we can make progress as an industry. So if you're not going to immersion, please send somebody to come be part of our community. Okay. Thank you everybody for being here. And especially thank you to you, Rick. Amen. We will see you next month for Alan Slider of Fee Only Network, going to talk with us about how to whip your website into SEO shape. Amen. Thanks everybody. Bye.
Thank you. Bye now.